I'm well enough to do this meeting. All right, it is 8:30, calling the regular meeting of the Insurance Benefits and Legislative Committee for the Board of Retirement. It is Wednesday, January 4th, 2023. Are there any announcements?
Yes, I'll take care of that, Vice Chair Gray. This meeting is being conducted virtually and in person, so I will do a roll call of the trustees to confirm attendance. Mr. Knox.
Good morning, I'm here.
Mr. Santos.
Here.
Mr. Bernstein.
Here.
Mr. Sanchez.
Good morning.
Mr. Oakham. Mr. Green. Ms. Greenwood. Mr. Kehoe.
Present.
Mr. Harris.
Here.
And Mr. Robbins will not be joining us today. Vice Chair Gray.
Thank you. Second item is approval of the minutes.
I
For
have
the-
to finish the announcements.
Oh, I'm sorry. I thought you.
Sorry. Staff participating in the meeting include CEO Louis Lugo, AEOs JJ Popowich and Laura Guglielmo, Chief Counsel Stephen Rice, Legislative Affairs Officer Barry Liu, from Retiree Healthcare, Cassandra Smith, Director, and Kathy Magida, consultants Stephen Murphy, Richard Ward, and Michael Zito from Siegel. Trustees, please use the Zoom raise your hand option to be placed in queue. At this time, we ask all meeting participants to mute your mics until you are ready to speak, and we may now proceed with the agenda.
Thank you so much. Okay, item 2 is the approval of minutes for the regular meeting of December 7th, 2022.
Second.
It's been moved and seconded. Please take a roll.
Mr. Kehoe,
Aye.
Mr. Santos,
Yes.
Vice Chair Gray.
Yes.
The motion passes unanimously.
Okay. Is there any public comment?
I have nothing.
Okay, no public comment. We'll move on to item 4, the reports. Barry, our engagement report for December.
Yes, thank you. Good morning, Vice Chair Gray and committee trustees. Some items of interest for you this month. So the first item is regarding U.S. life expectancy. We're approaching the 3rd year of the COVID pandemic, and the CDC's latest numbers show that there was a decline in 2021 due to COVID-19 and illegal drugs. So life expectancy dropped to 76.4 years from 77 in 2020. So then Americans can expect to live as long as they did in 1996. And basically every age group in the US saw an increase in the death rate. About 3.46 million people died in the US in 2021, which is about 80,000 more than happened in 2020. So, in terms of COVID, some countries had experienced bounce backs in 2021 as they brought the epidemic under control. So certain countries such as Belgium, Switzerland, and Spain had bounce backs. But unfortunately, the US was among the group of countries where life expectancy continued to drop, such as Germany, Chile, and Bulgaria. The next item is about a report from the National Institute of Retirement Security. They released a report examining retirement income adequacy for public sector employees. For a long time, public sector retirement reform has focused on costs rather than, well, what is the income adequacy and retirement security that retirement plans can provide. So some of their key findings on retirement income adequacy talks about the fact that, there's no single number. It's really individual based in terms of what is a retirement number. For younger people, retirement is challenging, and also they're faced with rising medical costs. And then as far as employees in the public sector, they need to save about 4 to 6% of their own salary for an adequate retirement. If you think about that 3-legged stool of, employer-sponsored plans, personal savings, and Social Security. But as far as retirement plan design is concerned, we all know that DC plans provide less retirement income than DB plans. interesting description here is that the average DB plan with a 2% COLA would provide adequate income for employees who have Social Security and retiree health care. So that's sort of, describes most of our plan design at LACERA. But at the same time, if you don't have Social Security coverage or a retirement medical plan, then that would, create more pressures on saving more to cover that income gap. The next item is about 401k hardship withdrawals. So, we've been facing inflation for the last couple of years, although it's, tamped down a bit. But according to Vanguard, they've seen an increase in hardship withdrawals, the largest increase since 2004. So that, along with increasing credit card balances and declining savings rates, suggests that households are having trouble making ends meet and that they need more cash by making these hardship withdrawals. Hardship withdrawals are pretty adverse for the plan participant because for one thing, not only is your distribution taxable, but if you're under 59.5, you pay a 10% penalty. Also, you're not allowed to pay back the withdrawn amount compared to, say, a plan loan. And also, some plans will disallow you from contributing to a plan for 6 months after the hardship withdrawal. So taking a hardship withdrawal really creates a situation where you have to play catch up to get back to your original, contribution rate. And last item is about false alarms on pension plan trends. So there was a recent article in MarketWatch from two professors at the Hoover Institution and Stanford University. They were arguing that public sector plans were using unrealistic discount rates. So instead of the average discount rate now of about 6.7%, they're arguing that a treasury bond rate of 4% should be used. This might sound familiar to some of you regarding in the past at the federal level, the PEPTA, the Public Employee Pension Transparency Act, which kind of argues the same thing, that a lower rate should be used and that's what needs to be disclosed. But NASRA and NERS had published responses to the article, arguing that the risk-free rate is misleading and inflates pension liabilities. And also the fact that according to NERS, there's no national liability for state and local government plans, since those plan sponsors are solely responsible, and that plans are long-term investors and they establish their funding targets through consultation with trustees, staff, and actuaries. So, and in addition to that, but a lot of state and local plans also make changes after a Great Recession to strengthen the plans against future market downturns. So that concludes my report. Happy to take any questions.
Are there any questions or comments? Seeing or hearing none, we'll move on to item B. Thank you, Mr. Liu, for item A. Item B, Cassandra, staff activities report for December 22nd. I'm sorry, December 2022. Good morning, Cassandra.
Good morning, Madam Chair, members of the committee. Last month at December 6th Board of Supervisors meeting, they approved the continuing of our Medicare Part B reimbursement program. That changed the Medicare Part B standard amount from $170.10 in 2022 to $164.90 in 2023. We conducted our mass mailing to all of the members that are currently enrolled in a Medicare Advantage or the Medicare Supplement Plan on December 20th. We've began receiving verifications, but I must give kudos to Systems for their assistance this time. They assisted us with, because there was a reduction in the standard amount, we were able to automatically go through and reduce the standard amount for everybody that was receiving the standard amount, because we know that those individuals will continue paying the standard amount. And so we were able to automatically update 55% of the members that are enrolled in a Medicare plan, which is a huge accomplishment for retiree healthcare and our members in the timeliness of getting those processed. And that's it.
Well, thank you, Cassandra Smith. Really appreciate that report. It's interesting how we kind of start out a little slow in January, but it's going to be on the uptick real quick before we know it.
Yeah.
All right. Okay, our claims experience, Steve. Murphy
Good
from Stigo Consulting. Good morning.
Good morning. Happy New Year, everyone. Happy to be joined by Michael Zito this morning. He'll present the financial experience report, and then I'll provide a legislative update. Michael, go ahead.
Can you see my screen?
Yes.
Okay, perfect. Thank you. The first page contains LACERA's enrollment and monthly premiums. Nothing really much has changed from month to month. On the next slide, the year-over-year trend for Anthem increased from 9.9% to 11.2%, mainly due to large claims experience for the coverage month ending November 22. For Cigna, the year-over-year trend decreased slightly from 20.5% to 19.6%, mainly due to mature retiree population. And then the Kaiser experience is through August of 2022, and it was carried over from the prior month, and it'll be updated in the future report. For the Anthem plans, for all the plans, the year-over-year trend increased from 8.6% to 9.2% compared to last month's report. And for the Kaiser utilization report, this was carried over as well from last month's report and will be updated in a future report. As discussed earlier, the large claims experience for Anthem increased to 154, around 154% for the current coverage month period. And the rebates on a per retiree per month basis for the period ending September 2022 increased from $150 to $151. And for the dental claims experience, the year-over-year trend decreased slightly from 7.7% to 7.4%. The vision claims on a per retiree per month basis remains essentially unchanged at $2.36.
Great. Thank you, Michael. Any questions from the committee members?
No. Any questions? All right, Stephen, take it away. Our federal legislation.
This couldn't be more brief because of all the activity going on. The only thing I can offer of substance is it's likely the COVID-19 public health emergency will be extended through the spring, which will take us into April. We should see that formal announcement probably within the next 7 to 10 days. And that's what we have from a compliance update.
Okay. Anything else on the federal side?
I wouldn't dare to talk about it. I think the good news is when we do the offsite retreat, Kathy Backich, who has spoken to the group before, will provide some updates from Washington, D.C. So kind of a post-election recap, and then maybe a little insight into what we might anticipate in over the course of the next 12 months with the new Congress.
Okay, so you're not predicting who the speaker is going to be.
It's not even 9 o'clock yet. Absolutely not.
All right. Thank you so much.
Great. Thank you, everyone.
We are moving on to items for staff review. Anything?
I have nothing.
And does anyone have any suggested items for our future agendas? All right, I'm hearing none. There's good of the order, and I know Les usually just says, hey, if anybody wants to say anything, speak up. No, good of the order. Well, I know everyone is going to say this in our main meeting, but I'm going to say it now because Les is the chair of this particular committee. So my prayers are with his recovery. It is not an easy recovery, although he seems to think it is. But having seen my brother go through it, it is not that easy. And I'm hoping and praying that strong man will rest. And you all know he's not going to rest. But anyway, Les, if you're listening, my prayers are with you, and so is everyone else. All right. So that is there a motion to adjourn? All right,
Nope.
Mr. Santos, motion to adjourn. It is 8:44. Oh, Herman?
So move. Motion
Okay.
to adjourn.
Mr. Bernstein? What time shall we start, or when will we start?
I'm gonna presume unless he was just speaking, he just unmuted. Tell us our time, sir.
0900.
Thank you. There you go, Ms. Gray. Thank you for a good meeting.
Thank you.